Welcome to my YouTube channel where you get the answer, I should say, to, hey, what's the market going to do? I'm going to provide those answers to you starting right now. Let's go do a little background here. Let's go back yesterday. I just wanted to show you something, especially the new people who haven't been here before. Okay, if you notice that we had a crash here back in 2018, the last month of December 2018, right there. We had another crash 2020, and we had this crash right here in 2022. But there's a difference, because you see, these crashes were able to rally. See this? We had a beautiful rally on this crash, and that was actually the last month of December we had this crash, 2018. But we were able to rally off of that because because the Fed printed money. They printed over $8 trillion to buy bonds to push the market up. Over here, we had the 2020 crash, went down 31%, and they wanted to rally that too, so they did some more QE, and they printed under QE $40 trillion to get a rally of 123% up to January 2022. So essentially what they did, they paid $8 trillion for the first rally, and they paid over $40 trillion for the second rally, and next time you go to the supermarket and things are expensive, you can get pissed off, because that's why, all right? Pushing the market up artificially. And now this market crash is not, there's no movement. How come we're not moving on it? What's going on here? Well, they're not moving because they had to stop playing that game. That's what caused the inflation. So they cut it out in November of 2021 and January 2022. No more than 150 billion, no more the QE. Because if they did, we go into a depression. So this rally here that collapsed, they can't move it out. It won't happen, because unless you do it by earnings, they're not going to do it by earnings, for God's sakes. Earnings are horrible. Or they do what we call a capitulation. Now, what's a capitulation? Well, capitulation is where, if you go back and you take a look in 2008, and if you see where we had this big move right here, we had this big move in the market, and that was, see this 40%? I showed you this yesterday, that 40%. 2008, fear came in, all right? And fear went through the roof. Look at that. Once it hit 40, shot up to 70. And the 2020 crash, once fear hit 40, it went up to almost 70. And what happens when you get up to that 70 area? The market crashes, okay? The market simply crashes. That's called capitulation. And you want capitulation. You want that fear, because everybody says, get me out, I don't care, get me out. And that's when you go and you buy stocks that are on sale. Now, but we're not getting a capitulation either. Why? Because everybody's telling us how great the economy is. And our president tells us how great the economy is. And the fake business news network, they come on and they tell us how great the economy is. It's all, excuse the language, bullshit. We all know it's not. So because we're not getting fear, there's no fear, okay, in this rally we're having right now, there's no fear. That's why we keep on, this sell-off just keeps going down. We keep languishing, I should say. And see right here, compared to these guys that took off. So what are we going to happen? What's going to happen? Well, what's going to happen is simple. The market is not going to be able to break out of its downward channel like they did before. Okay, it's not going to break out. It'd be impossible almost to break out unless a couple things happen. One is they get good earnings. All right, but they don't want earnings. They're not focusing on earnings. They're focusing on, the CEOs focused on getting rich off of QE. So the earnings have been horrible. And then the only other way you can get this to turn around and rally, like the other two, is QE, but that would put you in a depression. So, and a capitulation. So you got to have a capitulation fear. We aren't getting that. You got to have either earnings. We're not getting that. And you got to have QE. We're not getting that. So they better break the back of inflation. He's got to raise rates. Instead of doing 75 basis points at a time, he's got to go, instead of 0.75%, he's got to go 5 points, 8 points. He's got to break the back. Until he breaks the back of inflation, the market's not going to go anywhere. We're going to keep going in a downtrend, and we're going to only get these big rallies when there's earnings season. And this last earnings season, the second quarter, look at the big rally we got. Why? What moved it? Banks and techs. And what's moving this rally? Bank and techs, because they're rigged. They're rigged. Remember, when they set up earnings season, they always set up the banks first, because the banks, they can, remember, those are value stocks. They can make sure value stocks have profits by shifting over, and I told you this before, from their set aside for bad loans, take that money and shift it over to profits that they didn't make. They just shifted over, so now the bottom line looks great, stock rallies. And then the other thing, the tech stocks, they line up second. They don't need profits because they're growth stocks as compared to banks that are value stocks. So all they have to do is beat their own estimates that they set. Isn't that a bunch of, excuse the language, bullshit? All they have to do is set up their own estimates, and they beat them. What a wonderful thing. So until something changes, we're going to continue to have failed rallies. They're called bear market rallies, and exactly what we're in now. All right, so again, remember, we can't break out as we did here in 2018 and 2020 with big rallies, because these were all QE rallies. There's no QE, so you got to substitute with earnings. There's no earnings, or you got to substitute it with fear capitulation. And that's not happening because the fake business network bullshits everybody every day, saying how everybody's strong, the consumer's strong, they got big savings, when no, that's not true. So look for more of a downtrend to continue after these rallies. Remember, these bear market rallies are short covering rallies, and they're normal in a down market. When you get into a downtrend channel, you can't get out of those. Those are really hard to get out of right there. Really hard, okay? So I hope that helps you out. Now, to find out what stocks we're making money on during this, okay, downtrend channel, and what stocks we're in, go to my site, philsgang.com. Join the gang for 10 days. It's free, and you'll find out the stocks that we are buying and we are shorting, okay? Check it out, philsgang.com, and learn during those 10 days how to make money in a downtrend channel, especially shorting. All right, see you on the charts.